Hello and welcome to April 14th. Alpha's Adobe at 128%. And here it is. There's the chart of 128 with a 3% pullback. We were at 131 yesterday. We're still holding on to about $735. The objective is that we have now the stop is now moved the last bar low, and we're using only a 10-cent buffer. Why? Because I want to get out with at least 100% or better on the exit. And the reason is that it's a nice, good feeling in that you're having what they call a home run in the options world. So 0 to 25 is first base, 25 to 50 second, 25 to 75 is third, and 100% or better is home run, and that's what we're looking for. The objective is the money. We can get out with at least $700 or better on this trade. Then it'll drop this down to close to under $1,000. Excuse me, on the go. So there it is for today. We are on ROI. Exit rule number 3, ROI 100 or greater, last bar low. All right, that takes us now to KR in the second position, and KR is right here. And remember, KR had reached the third ratio, so we're waiting for a lower low to form higher than the 35.53 to move stop to here. So we're looking for the opportunity to see if we can get a higher low here. We had a chance here, but it didn't happen. Now we got this. And note that this is a hammer. It's in the middle of the cycle, so it could be a possibility, but we have some indication that we're going to still continue having some kind of pullback from here from the stochastics and here from the RSI. And also you can see the histogram cross underneath the red arrow. Could we take an exit here? We could. There's a lot of exit rules out there. Just the point will be is setting up the rules and being consistent. The rule here, if you were to do an exit here off this red arrow, that is a Michael Covel exit. Michael Covel had a system of the 30-day moving average, 3 arrows up to get into the trade. When any one arrow goes red, you immediately exit the trade on the next day. So that would be this would be setting up as a Michael Covel exit on last bar low right there, or on open, whichever. Again, exit rules are written down, but there's so many that you can pick and choose. The biggest lesson to learn here on exit rules: don't change exit rules in the middle of a trade, and don't go changing exit rules from one to another during a trading session. Right now, this trading session is on a monthly. So that's what we do our monthly Elvis shifts on the first of the month, and we do our little tweaks. The idea is to keep track of what's happening to be confident that your system works. All good systems work, but consistency of keeping to them and the discipline to hold your positions is. I mean, look here. RCL is at 63% minus. We're not panicking. We're going to be we are going to be initiating a escape clause that we do have, and we'll actually activate those escape clause because this is getting close to less than 30 days away from 60 days away from expiration. So I'll be looking to getting an exit to get out of this, and then just accept the loss, add it to the ode like all the other positions, and then continue looking for opportunities to trade it in the future to get it back. Okay, that said, with the exit rules, covering the exit rules and consistency and discipline. Or take this now to Capri. So here at Capri, we had we had that hammer I said about. There it is. Then price came in and try to push up and come down again. So somewhere in here we're developing some kind of support, and again it will be a matter of its accumulation. We still have some divergence. The stochastics is rising. The RSI is dropping. So the two are not in agreement. Once the two comes in agreement, that price is going to explode one way or the other. We're still risking our 1 ratio from the blue to the red. That's our 1 ratio, $1 for 10, and that will be sticking. That also controls that's your risk management, because the time will come. And look here, if let's say that we got into the trade down in this zone, that would have been a 3-to-1 right there. So the point comes to is that you stick to your 3-to-1 ratio rule and let your one lose, just like I'm going to have to work with RCL, except that we're going to be going to escape clauses because we are getting into the danger zone of option expiration date. And when the trigger happens, something like Adobe or KR crosses that the 3 ratio, it pays back in spades. So that takes us now to AT&T. And AT&T, and there's our hammer at the bottom of the price cycle. We could have another small doji, we could have another small drop, but there's there's likelihood there's some support developing here, and we could be getting into turning around on this trade. Here, look, the stochastics is going down and getting very close to the 20 value line. 20 value line is one of the standards of acceptance of where price has a possible opportunity of changing direction. But it's not going to change direction until after it goes up. Now, it could come down, cross into the 20 and come back up, which would be ideal, or just come down here, mangle along, and then pull back up and get out of here. So we do have till June 25 to make our exit here on T against a 3,761 O. All right, that takes us now over to Walgreen. And Walgreen is the last of our no stock. CBS, I just realized CBS was in positive territory today too. Okay, so there's our Walgreen position. And we have just a meandering along. No real danger there. See the angle of attack, it's pretty shallow. That's a nice indication. Look at the flat lining here. Indication of a accumulation. So right in here we have accumulation. So we'll be looking at that. Going on now to CBS, we finally come back into positive territory. Only at 3%, but still it's in our direction. Ooh, nice move on that candle though. Nice move. This line here is my 3-to-1 ratio line. This trade started on March 8th, and so I would have to keep adjusting my time frame to be able to see it. Let's see what happens. Okay, so there's the 3rd ratio way up there because it started way down here when it's very wide. This was not a very happy trade, but it occurred as it is, and then our 3-to-1 in turn reflects that wideness. So that's what we have to be looking at in our 3-to-1 right there. Okay, so I need to back up to yesterday. Yesterday, I failed to report that we got stopped out of our energy stock, penny stock. We got stopped out, and we took a loss of about $60. Rounded up, we rounded to $60 in the loss. Now you see how it popped back up again. These things happen. But right now, this was a penny stock trade, and we got stopped out for $60 loss. And the result is that we're now transferring that $60 to XLE. Going on to Sundial, which was the other penny stock that we were testing for experimentation with the Stochastic Strategy scanner, and that lost $55. That's going to be transferred to an ETF called DBA, which represents agriculture. So that is today at the end of today's report, and our position on Alpha is at 12.7 versus the SPY at 10.4. And I thank you very much for stopping by and checking it out.